And welcome back to Forex Scope. I'm excited to have you here today as we dive deep into the world of gold. We'll be analyzing the 15-minute and 1-minute charts to uncover potential trading opportunities and give you a glimpse into where the price might be headed. If you're new to Forex Scope, make sure to hit that subscribe button and turn on notifications so you don't miss out on any of our valuable insights. Let's get started. The support zone is identified between the prices of 3,966.693 and 3,971.109, spanning from timestamp 176-234-6700 to 176-235-1200. This area shows clear signs of accumulation and price indecision, with multiple candles exhibiting long lower wicks and relatively small bodies, indicating buyers stepping in when the price drops to this level. The first key candle on November 5, 2025, 12:45, timestamp 176-234-6700, shows a price testing down to 3,963.513, followed by a strong recovery, forming a significant low. Subsequently, on November 5, 2025, 13:15, timestamp 176-234-8500, the price revisited this area and found support around 3,964.635 before bouncing higher. The multiple touches and the sideways movement observed within this price range suggest a strong level where buying pressure is consistently present, preventing further downside. The presence of numerous candles with significant lower shadows within this range further reinforces its validity as a support zone, demonstrating buyers' commitment to defend this price area. The identified resistance zone is located between 4,009.109 and 4,016.278, covering the timestamps from 176-241-6000 to 176-241-7800. This price range exhibits significant selling pressure, as indicated by the series of candles with prominent upper wicks and limited upward progress. Specifically, the candle on November 6, 2025, 8 o'clock, timestamp 176-241-6000, reached a high of 4,009.561 before encountering resistance and closing lower. The subsequent candle on November 6, 2025, 8:15, timestamp 176-241-6900, attempted to push higher, reaching 4,016.278, but was met with strong selling, resulting in a bearish reversal and a close at 4,015.685. The inability of the price to sustain levels above this zone, coupled with the clear rejection seen in these significant price points, highlights its strength as a resistance. The multiple attempts to break higher being thwarted at or near these price levels indicate a battle between buyers and sellers, with sellers currently dominant in this area. The consistent capping of upward momentum around this price range suggests it will act as a barrier to further price increases in the near term. The support zone is identified between the timestamps 176-243-3580 and 176-243-3640, with the upper bound at 4,004.769 and the lower bound at 4,002.899. This area demonstrates significant price action activity, with multiple candles showing strong reactions within this range. Specifically, the price repeatedly tested the lower boundary, indicating buying interest and a potential floor. The candle at 176-243-3580 shows a large wick extending downwards, followed by a recovery, and the subsequent candle at 176-243-3640 also reacts within this established range, suggesting accumulation and a consolidation phase before a potential upward movement. The significant volume associated with the price's reaction in this zone further reinforces its importance as a support level. The repeated testing and the formation of lower wicks suggest that sellers struggle to push the price significantly lower, establishing this as a key area of demand. The observed sideways movement around this price point, characterized by several candles interacting with its boundaries, solidifies its role as a strong support zone. The resistance zone is identified between the timestamps 176-242-4460 and 176-242-4700, with the upper bound at 4,009.615 and the lower bound at 4,007.157. This area showcases a clear period of price indecision and consolidation, where the price struggled to break above a specific level. The candles within this time frame exhibit smaller bodies and longer wicks, indicative of opposing forces battling for control. Specifically, the price repeatedly approached the upper boundary and was pushed back down, failing to establish a sustained move higher. The candle at 176-242-4580, for instance, shows a significant upper wick, indicating selling pressure rejecting higher prices. Similarly, the subsequent candles interact with this zone, demonstrating a clear ceiling to upward momentum. The tick volume during this period also suggests increased trading activity as buyers and sellers contested the price. This zone represents a significant hurdle that the price has historically found difficult to overcome, making it a strong resistance area. The repeated attempts to break higher and subsequent rejections highlight the presence of strong selling pressure at these levels. The current price is consolidating around 4005.857, which is near the lower band of the Bollinger Bands and also within the identified 1-minute support zone. Historically, gold has shown a tendency to bounce from this support area, as evidenced by the previous price action data. The Fibonacci levels also indicate potential retracement zones. Considering the recent price action, which has been volatile and ranging, a short-term upward movement towards the middle Bollinger Band, around 4009.36, is probable. However, resistance at the 4007.109 level may cause a temporary pullback. If this resistance is broken, the price could test higher levels towards the upper Bollinger Band and potentially retest the prior resistance zone around 4009.615. Conversely, a break below the support at 4004.769 could lead to a sharper decline towards lower Fibonacci levels. The current tick volume is moderate, suggesting no strong directional bias yet, but the confluence of support from previous price action and the lower Bollinger Band provides a good foundation for a short-term bullish move. The previous resistance at 4018.792 is a significant hurdle for further upside. The overall market sentiment, based on the recent consolidation and the proximity to support, suggests a potential bounce. The presence of multiple support and resistance levels within a tight range implies a battle between buyers and sellers, but the recent price action has shown resilience around the 4005 to 4007 levels. The price will likely oscillate within these levels before a clear breakout. The upward potential is capped by the resistance zone, while the support zone offers a buffer against significant downside. The zigzag pattern predicted accounts for this oscillation, reflecting the current choppy market conditions while hinting at potential upward momentum if support holds.